Welcome back to your ultimate pit stop, Piston Pundit. GM officials frequently shift blame for their struggles. Slow production is blamed on market growth, and reliability issues on suppliers. Despite the electric revolution not going as planned, GM's CEO points fingers at EV owners rather than addressing production and reliability challenges directly. The company's failure to resolve these issues and stem financial losses from EV projects continues. Let's dive deeper. Number 7. Earning back consumer trust. Consumer trust is vital in the automotive industry, but GM's blame-shifting approach has hurt its reputation. Issues like software glitches and battery errors in the Chevy Blazer EV have sparked customer complaints. Instead of addressing these problems, GM often attributes them to new technology challenges and blames customer expectations. Moreover, GM's high prices for models like the Silverado EV and GMC Hummer EV have alienated average buyers, slowing sales. Despite the EV market growing 11% year over year, GM's production and strategic missteps are the real problems. To regain trust, GM must acknowledge and fix its issues, offer better pricing, and enhance customer service. Adapting to consumer needs and market realities will be key to its EV success. Number 6. The battery breakthrough. Despite its challenges, GM is taking steps to address its issues. According to recent reports, GM is poised to license CATL batteries. Until now, GM has relied on Japanese and Korean battery technology, but this new partnership could be a game changer. GM plans to license CATL's technology for lithium iron phosphate (LFP) batteries, which could be produced in the US or Mexico. This move follows a similar agreement Ford made with CATL. By doing so, GM aims to sidestep federal regulations that require North American battery production to qualify for tax credits. LFP batteries are not only more affordable but also offer several advantages, including lower toxicity and a longer life cycle. The reduced cost of these batteries could lead to more competitive pricing for GM's vehicles, potentially attracting a broader customer base. Number 5. The financial fallout and blame game. GM's ambitious electrification plan has come with a hefty financial price tag, yet the company's leadership often blames external factors, including customers, for its profit shortfall. Despite billions invested in R&D and production, GM's return on EVs remains poor. Early 2024 sales rose, but EV profit margins were disappointing due to high production costs, particularly with Ultium batteries. The discontinuation of the Chevy Bolt, a more affordable option, highlighted GM's financial struggles as they shifted focus to high-end models like the Hummer EV and Cadillac Lyriq, which appeal to a niche market. GM's CEO, Mary Barra, has attributed financial woes to slower EV market growth, though data shows steady adoption. Future investments, including a $7 billion commitment and a partnership with CATL for cheaper batteries, aim to improve margins. Until these efforts pay off, GM's financial outlook remains uncertain, compounded by their ongoing blame shifting. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts just like you. Now let's shift gears and steer towards our next point. Number 4. The blame game continues. A few weeks ago, Barra told Bloomberg that GM's goal of 1 million annual EV sales depends on customer demand. She blamed customers for the slow progress, despite ongoing market growth. Cox Automotive reports an 11% increase in EV market size in Q1, and GM sold over 21,000 Ultium EVs in Q2, up 34% from the previous quarter. GM's lots aren't overflowing, indicating strong demand. Barra also cited delays from suppliers, particularly affecting Bolt production. Although Barra promised a boost in 2024, GM's production hasn't improved significantly. Despite earlier plans to avoid affordable EVs, GM is now struggling to bring back models like the Bolt while offering expensive options like the Silverado EV and GMC Hummer EV, which are unlikely to become mass sellers soon. Number 3. Tackling software challenges. GM's electrification issues run deeper than just production capacity. Over recent years, the company has struggled with EV quality, particularly due to in-house software problems. The Chevy Blazer EV, for instance, was plagued with 57 software errors, leading to a halt in production and sales. Problems included infotainment system glitches, such as screen freezes and connectivity issues, and serious battery management errors affecting range and charging. Over-the-air updates failed to resolve these issues, forcing GM to make significant software revisions, which came with compromises like limited third-party service support and poor smartphone integration. GM's ability to overcome these challenges will be crucial for its future success in the EV market. Number 2. Current status of GM's electrification efforts. BARA and GM officials have faced heavy criticism for failing to meet EV promises, impacting the company's reputation. Despite this, the ability to address electrification challenges remains within their control. The slower-than-expected market growth has given legacy automakers like GM more time to adjust. GM, like its peers, has yet to figure out how to profit from EVs. New battery technology and affordable models, such as the next-generation Chevy Bolt, could turn things around. However, financial markets are skeptical, with stock prices declining and analysts doubting GM's ability to reach its goal of selling 1 million EVs annually by 2025. With only about 50,000 Ultium-powered EVs sold by the end of the last quarter, GM is significantly behind schedule and far from meeting its ambitious targets. Number 1. Falling short of the 1 million EV goal. Under BARA's leadership, GM's electrification efforts have been marked by unmet promises. Despite pledging to sell 1 million EVs by 2025, BARA recently admitted that this goal won't be met. While BARA blames slow EV market growth, the real issue lies in GM's production struggles. Although GM reported a 34% sales increase in Q2 and a 40% rise from last year, production hasn't scaled up as needed. Key problems include an inability to optimize production and ramp up Ultium battery cells, with only about 21,000 EVs sold last quarter. The discontinuation of the Chevy Bolt and production issues with Ultium cells highlight GM's struggles. BARA's other ambitious promises, like phasing out gasoline vehicles by 2035 and investing $27 billion in autonomous driving, further impact GM's credibility. The company's consistent overpromising and underdelivering have eroded trust among customers, investors, and the public. Thanks for joining us on this journey through GM's electrification saga. Don't forget to subscribe to Piston Pundit for more updates and insights into the automotive world. See you next time.